Goldman Sachs, JPMorgan, Citigroup all posted double beats yesterday, lifted by a surge in deal-making and trading activity. Goldman now on pace for its best year ever in its investment banking and markets division. It is still, however, reportedly planning for layoffs tied to efficiency and AI restructuring. Meanwhile, JPMorgan CEO and Chairman Jamie Dimon is warning of potential credit market excess after two bankruptcies in the auto sector, First Brands and Tricolor. It's not the first time we've heard Jamie talk cautiously about the macro story and credit. Ryan, your take.
I mean, Jamie Dimon, come on. Some point here, he's got to get positive, right? He's been negative now for the last couple of years. He told us about clouds on the horizon 2-3 years ago. We've been waiting for the tsunami to hit. It hasn't hit. But in all fairness to him, he's a banker, and bankers should be more negative because they're always thinking about what can go wrong. So I'd argue that makes him a pretty good bank chief because of that. But let's face it, bank earnings have been phenomenal here. And we talked about this last week. They were going to be good. And just like they're firing on all cylinders. If you look at Bank of America this morning, it's up almost 5%. They're up almost 45% on their investment banking earnings. So I think if you just look at it from every angle right now, what a great way to start off the earnings season. And banks are a great litmus test for how strong the economy is. And it looks pretty strong to me, contrary to what Jamie Dimon is saying.
I just want to point out that we are right now in the fourth quarter and we are watching a government shutdown. We are now at day 15 and bankers are telling me they've got lots of stuff on deck. They've got lots of stuff on the shelf in terms of taking companies public, deals that they are working on. They can't do any of it because the Securities and Exchange Commission is closed. So next quarter, when we're talking about the fourth quarter, I think you'd see a different situation. Even though capital markets are hot, IPOs and deals are going to be going up against the government shutdown.
They were here, but to your point, if we actually solve this government shutdown, which we should, that'll be another catalyst for more deal making in the next quarter.
Yes.
Along with the fact that we have the Fed probably cutting interest rates again twice this year. And I'd mentioned the other big catalyst right now is oil prices are plummeting. We're under $60 a barrel, which is extremely disinflationary, huge stimulus for the global economy. And I'd mentioned global, central banks are cutting interest rates as well, just like they were back during the pandemic. So the amount of stimulus right now and firepower for the economy globally, not just in the U.S., is off the charts. And I know Adam over here is probably feeling the same way. Wow.
Oh, yeah. Well, I love what you said about oil down to 58.67. That is definitely President Trump's genius on his oil and energy policy, tapping into the capacity of America.